We got a carriage agreement here. These things always are a game of chicken, right? I wonder what you think, though. Let's talk Disney first, though. I mean, in terms of all that's going on with the company, they're making this big transition this year. Stocks outperformed year to date.
Yeah, I think Disney basically, Mike, has all the marbles. And there's a saying in the gaming world, the race isn't always won by the strong and the swift, but that's the way to bet. And once the Fox deal is completed, they're just going to have a dominant position in Hollywood, over 40% share of box office, and they're investing massive amounts of money in what I think are going to be very, very creative theme parks. Now, they're just at the stage where they're letting nice people in the investment business take a look at some of the technology, and I'm thinking it's pretty whiz-bang, and they just closed the park today. It's a mind-boggling consumer franchise. It's selling for less than stocks like Colgate and Procter & Gamble. Tremendous amounts of free cash flow, very stable, competent management. All the T's are crossed and I's dotted. I think that's going to lead the parade out. Now, the negative on Disney, of course, is that they're going to spend massive amounts of money getting this streaming business started. But the reality is Hollywood had its blinders on when it came to Netflix. They basically created the dragon, and the dragon is taking some money out of their cash flow now, and they have to do something about it. And really, Disney and I think Time Warner had no choices other than to get into the streaming business and take the cash flow hits.
I mean, for the past few years, really the prospect of deal making has driven so much of the performance of this sector. Are we done with the mega deals in media? I
absolutely think so. And as I've said before, some of the deals weren't exactly the best thing. I mean, Verizon, it's hard to say how they didn't lose close to $5 billion buying Yahoo. And I think Time Warner Telephone Company is going to be good, but telephone company has taken on a massive amount of debt, and basically, yeah, and all of the free cash flow is going to go to getting that debt down, because the management of a telephone company, utility type vehicle, really can't stomach that debt, even though it's at a pretty good rate. So I don't think you're going to see a whole lot of deal making, other than the fact that clearly CBS and Viacom have got to get together. They totally lack scale, and I think that's going to happen.
In the earlier phase of the whole rollout of internet TV, or whatever you want to call it, streaming, it was posed as Netflix versus traditional media. Obviously, that's become more complicated. It doesn't seem like a zero-sum game. But where does that leave you with regard to Netflix as a business and as a stock?
Well, I think I look at Netflix as a consumer and as a stock. Because if it doesn't hit the consumer button, it's really not going to be a business. It's a fabulous, fabulous consumer product. They keep rolling out absolutely great content. Then, however, I look at Netflix as a stock, and I think, well, there are problems. It's got a monstrous multiple. It's over 70 times current cash flow. And its growth basically, it has a culture so that it has to grow, or else the shareholder base is going to go somewhere else. The growth has to come from foreign markets. And Brazil is not the United States. India is not the United States. These markets have infrastructure difficulties. The consumers there are largely going to want native content. Rupert Murdoch, many years ago, lost billions of dollars trying to figure out India. And it's remained an amorphous situation. So I think Netflix foreign expansion has way more risk than the market's giving it credit for. I also want to see how this content spending actually looks on the cash flow statement after the first quarter's released. So I'm on the sidelines on Netflix.
What do you think Apple has cooking in TV content?
That's really a deep, dark secret. I don't think anybody's getting into the skunkworks out there, and the history of the company is extreme secrecy. Steve Jobs said
it feels like they're working on that.
Oh, they're not doing nothing. But in the scale of things with Apple, it's kind of like a sideshow. And the reality in Apple, I think, is the services business. And the services business is growing in the neighborhood of 15–20%. It has a mind-bogglingly high marginal profitability. You went into the Apple stores this Christmas, and I was in 5 or 6 of them, and it's really an unpleasant experience because you can't find anyone to help you because they're too busy helping other people. And if I can get a business like that is essentially capacity constrained, and the problem is there's too much demand, and I'm only paying less than a market multiple for it, I think it's really a no-brainer. And the free cash flow is either going to be used to increase the dividend or to buy stock. And, we'll just have to see when he talks to people about what he's going to do with it at the end of the first quarter. But I think it's going to be all good news. It's very, very hard to lose money in Apple. I think it went down close to $400 billion from its peak, Mike.
It sure did, yes. It's certainly more of a rock bottom valuation than it was a few months ago.